There are 3 moments in options trading where I instantly know someone's about to lose money and they don't even realize it. They think they're making a smart trade. They watched a few videos, plugged in a ticker, hit buy, and now they're holding a ticking time bomb disguised as a winning strategy. Today, I'm going to show you 3 red flags that should immediately tell you do not buy that option. These are the same mistakes I used to make early on, and the ones that quietly drain your account until one day you look up and wonder, where did all my money go? But not anymore. You'll spot these traps before they trap you. And hey, if you're tired of trading in the dark and want to see the real trades I make with full breakdowns, check the link in the description. Inside my community, I share every single trade, every win, every lesson, so you can start stacking consistent results and not regrets. Let's get into it. Let's start with the most common and the most dangerous. You're buying way out of the money options just because they're cheap. You look at a 15-cent call option and think, man, if this hits, I'll make 10x. And sure, you could. But let's be honest. Are you buying a high probability trade or buying a lottery ticket? Here's a brutal truth. Out of the money options decay fast. If the stock doesn't move your way quickly, that 15-cent option becomes worthless, and it happens fast. Beginners chase these because they're cheap, but cheap doesn't mean valuable. It just means nobody else wants them. If you're buying options with no plan, no exit strategy, and hoping for a miracle move, you're gambling, not trading. Now, red flag, you're chasing low probability, high dream trades, and no real edge. The second one is sneaky, and it eats into your profit before you even enter the trade. You see a trade you like, but the bid is at $1.20 and the ask is at $1.80. That's a 60-cent spread. Translation? The moment you enter, you're down $60 per contract. That's not a trade. That's daylight robbery. Wider spreads usually mean lower volume and lower liquidity. That makes it harder to get in, harder to get out, and nearly impossible to get fair pricing. Unless the trade has massive conviction and you're scalping intraday momentum, skip it. Here's my personal rule. If the bid-ask spread is more than 10% of the option price, I move on. Liquidity is not optional. It's a requirement, right? So here's that red flag. The spread is too wide and you're paying a premium just to play. Now here's one that even intermediate traders get wrong. You buy an option, the stock moves in your favor, but you still lose money. Why? Because implied volatility collapsed and took your premium with it. If you buy options when IV is high, you're overpaying. And when that IV drops, which it usually does after events like earnings, the value of your option tanks, even if you were directionally right. Let me break it down real simple. High IV equals expensive options. Low IV equals cheap options. If IV goes down after you buy, you lose money fast. So if you're buying options right before earnings or major news, pause, ask yourself, am I buying a story or am I buying value? Better yet, understand the IV percentile and how it compares to the stock's historical volatility. This will give you a huge edge. So here's that red flag. You're buying inflated premiums in high IV environments and wondering why your winning trades don't pay. Now for the bonus of what to look for. Let's flip it. Look for liquid options with tight spreads. Aim for high probability setups even if they seem boring. And check the IV. And favor lower IV environments when buying options. And above all, stop trading on hype and start trading on strategy. Options trading isn't about excitement. It's about edge. And edge is boring, repeatable, and highly profitable. So let's recap the 3 red flags. You're buying out of the money options with no real plan. You're ignoring bid-ask spreads and getting eaten alive by slippage. And you're buying overpriced options when IV is high and losing money even when you're right. If you've done any of these, it's okay. I have too. What matters is what you do next. And if you're ready to trade smarter with a clear system, real-time examples, and a community that's focused on consistent monthly income, check the link in the description. You'll see exactly how we turn options into a predictable income stream with full transparency. No fluff, no hype, just results. Let's make smarter trades together.